Hey, hello folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson and this is Spotting the Trade. What we're going to do in this video is talk about the economic data, see how that's impacting your markets, and then talk about some option strategies I'm thinking about implementing into my portfolio. So it's what you need to know before you go. And before you go, make sure you smash that like button. Also, right next to it, there's a subscribe button. That will give you an indication if you hit that little bell right next to it when I come in here unannounced. So make sure you guys have that lit up. All right. So without further ado, let's get on with the overall markets. Not a whole lot of economic data today to really talk about. Something we did miss out on yesterday is the Chicago PMI. Now, remember, we're talking about some of these manufacturing numbers coming in a little bit lighter than expected. Purchasing Managers Index is what the PMI stands for. Anything above 50 is expansion. It came in at 61.8. That's good, but it did miss on expectations of 67.1. I am coming off of the 68 that we got last month. So that number is starting to come off a little bit. We're seeing some of these manufacturing numbers wane a little bit heading into the holiday season, which is a little bit surprising, but we're seeing that ahead of that in this economy. So is it because these purchasing managers are actually seeing the lack of demand before we are? I mean, we already saw that the season was starting off pretty light with Black Friday sales coming up shorter than pre-pandemic. So folks aren't really getting out there right now. So some of that thought process was that Cyber Monday would have been a big deal. Well, it doesn't look like it was as big of a deal as everybody was expecting. So a little bit flat on this holiday season going forward. Now, talking about crude oil here, we've got crude oil making a bit of a bounce after yesterday's sell-off back into the 60s. This is an area that we had talked about. We would see weakness, and that should be where the market finds a settling down point, if you will, because if you look at the chart here, we can see that time and volume has mostly been spent right here between 65 and 70. So that 65 and 70 is where price has been accepted. Anytime you get extended over the top, that the longs start covering and bring it back down to this little area here. Now, Goldman came out and reiterated their value for crude oil going up to 85, something to keep your eyes out for today. Later on this afternoon, we're going to be getting the crude oil inventory numbers. So make sure you keep an eye on that. It's actually supposed to be a bit of a drawdown of 1.5 million barrels. So anything above that will show that supply is increasing and that demand is not really sucking up any of the supply out there. So that is what we're going to be keeping an eye on today. ADP non-farm payroll is another economic data point we got out today, coming in at 534,000 hires, expect to be 525,000 hires. So keep in mind, we are going to watch out for this Friday. We get our non-farm payrolls, first Friday of the month, unemployment Friday. So keep your eyes out for that. That's going to be the economic data point for employment that we keep our eyes out for. And we get our ISM, which is the Institute for Supply Management, later on this afternoon. Remember, again, anything above 50 is expansion. Anything below 50 is contraction for this Institute for Supply Management Manufacturing Purchasing Managers Index. That was a mouthful. All right. Make sure you guys, before you go, comment over there at the side. You guys drive this content, so make sure that you guys are chatting it up with me. This old salty, I don't know what this old salty guy can tell you guys, but I've been around for 25 years, and I think that I've got a few little quips that might help you out in your trading day. So if you guys want to take advantage of that, make sure you guys hit the bell and subscribe. The bell actually gives you a notification when I pop in unannounced. All right, so bonds showing a little bit of weakness here. Folks are still talking about this transitory inflation. I don't think it's as transitory as what folks are expecting, but we're also seeing the slowdown. That is going to put the Fed in a corner. We need to see the economy really start to take off here in order to kind of make up for some of these inflationary pressures that we're seeing. Now, yeah, the shipping costs might come down, bring down some of these products that we're shipping in from China. Those prices might start coming down here relatively soon. But remember, we've got this offsetting thing where wage inflation is here, and you can't take back somebody's wages once it's given. It's very difficult to do that, folks. It's just not going to happen. So wage inflation starting to seep into this, that will hold on to some of this transitory inflation that the Fed was talking about, or at least counteract it. Gold making a move to the upside here. I think people are going to start finding strength in some of these, or value in some of these assets that are correlated to the dollar, away from stocks. This month is going to be a bit dicey, as you can already tell, setting up for it coming into December here. A lot of people are going to be shoring up their positions in their portfolio. So we could see a lot of juking back and forth here. I'm just looking to add some hedges. I'm not going to really add a whole lot to my portfolio during this time, as the market really is not giving a great indication as to what direction it wants to go at this point in time. Here we go. We can see with the NASDAQ very back and forth, just one candle erasing the previous day's candle. So very sloppy, not giving any indication really at this point where we're going to go. I would say the risk is slightly to the downside for most stocks. NASDAQ, the FANGs, they might hold up here during this time, but the risk really is feeling like it's to the downside here. And the Dow Jones Industrial Average right back to the point of control. But again, big sell-off. We get these dead cat bounces, big sell-off, bit of a dead cat bounce. Are we going to blast through this 200-day simple moving average? Well, I don't think it's going to act as much of a support. There's going to be folks out there talking about this 200-day as a support, but because it's lining up here with this point of control, folks, that's where the most time and volume has been spent. That's where the market has accepted value. That is more of like a magnet. So we could really toggle back and forth through this 200-day simple moving average, because I think that the point of control will trump that 200-day simple moving average there. E-mini S&P is very similar. I mean, these charts in the equities look almost identical if you didn't know what the name of them were. Basically back and forth tracking. So just giving no indication as to directionality. Now, this overnight is a rally. So usually in the night sessions, when we get these rallies, they don't give you a discernible direction as to what's going to happen during the day. So it is going to really be data dependent, I think, today. So this ISM coming off below 60 could start signaling some weakness in the markets and maybe throw a little fear in there. So keep your eyes out for that. We also have construction spending numbers later on this afternoon as well. All right, I wanted to talk about this because of my Walt Disney trade that I'm looking at here. Walt Disney's had a big sell-off here, and when we're looking at these candlesticks, reading about them, what we're looking at is this spinning top doji right down here at the bottom. I used to call these are more of like a hangman doji here at the bottom here. So that is signaling the bottom on that chart there. You can see the black body has not confirmed it. That would almost be like an erase of that, but a settlement near the highs here would make this look very good. Now, I'm also looking at this Disney trade as a very low area to be able to buy it. We can go back to pandemic, and obviously it's going to be much lower than that. But coming out of the pandemic is about 50% of the way back from the bottom to the top. So that's where I'm looking at for this underlying to get involved. And notice, not too far away is the point of control. What I'm talking about here is in my Disney trade, I'm looking to add, because of this high volatility. Yeah, it doesn't look so high because of the pandemic, but if we take out that pandemic again, we can see that Disney for the last 6 months or so has very elevated volatility, which means that our prices in our option montage, or where we see all the strikes locations, we know those are expensive because of the volatility coefficient there. And I dig into those details in the webinars that we're going to be doing one tomorrow. So make sure you guys sign up for that. But we talk about the levers and pulleys in the markets here. So when we're looking at high volatility and we get our directionality is bullish here because of the way the charts are setting up, this is how I talk about in my swing trades. We're looking for a bullish move, high volatility. I need to sell some premium. Well, the best way to do that is really in selling some puts. Now, I'm doing this rather small because I don't know that this entire correction is completely done, but I do think strike location on this is really very favorable. So I decided to go into the December. It's only going to lasts for about 16 days. So I don't have a whole lot of time in this trade. So that theta is really going to be aggressive with this trade. Another reason why I want to sell these premiums. So the December, selling the 140 puts in there for, I'm trying to get about $1.95 in there. It settled right around, I think right around that price. But I'm going to look for a little bit of a bounce off of the open. And if we get some volatility spiking just a little bit, as people will come in and try and buy some options, maybe calls, that will still drive pricing higher. I could easily get filled on this. So I'm trying to go to the market for the most part on those, but I will play around with it to try and get filled on these D's 140 calls, or sorry, 140 puts, folks. All right, and the other thing that I'm looking to do here today is in Penn. We've got a bit of a bottoming pattern. I'd probably pull up that other chart and see what that says about Penn, but I don't know if I did that right, because I have to do the I have to do what they're doing for Bloomberg. Let's see, error, that's not giving me that. Oh, there we go. So we're looking at the bottom here. Spinning top doji occurred. That is indicative of a top or a bottom. Usually we look for those when we have had a big move, and we've had a big move to the downside. So when these set up towards the bottom or top of moves, that's where we're really looking for them, not inside of the middle of a move like this one right here. We got that little doji there. I don't know if I can drop it on there, but that is something that we would discount immediately because it's inside the body of the previous day. This is a good one right there, though. Today, haven't gotten a confirmation, but I'm looking for it. You guys know I'm long this Disney in my IRA, so I'm looking to lower cost basis on this constantly. And so I went into the December again because I want that theta decay, right? I've got high volatility. We can see on the previous chart with the volatility, this is at about 100% for the last 6 months, which is what I'm looking for on volatility coefficient. That means it's at its highest levels we've seen in a while. I've at the bottom of a move. I've got the chart set up. Not quite a confirmation, but you know, I'm a little bit more aggressive than most folks. So I usually get involved a little bit early, but I'm long Penn looking for the covered call trade. Did it in the December 60 calls in there for 85 cents is what I'm trying for. It looks like the market is a little bit higher. As you can see here, the pre-market indications, we settled somewhere a little bit lower. Let's just break this down into the daily chart so that we can see that it's a little bit higher than where we settled yesterday. So we settled right around in here, just a little bit slightly higher. That should give those premiums a little bit of a boost. So while I'm about 10 cents higher than where the pre-market open is looking, I'm still adding in a bit of a move to the upside to get clipped on these. So looking for the covered call trade in Penn, spotting that trade. Always try to lower that overall cost basis. As a matter of fact, you can go back right after the pandemic, and I can show you how with this Penn trade that's trading around 50, when I bought it at just less than $4, covered call trade, I own this stock for 0 cost basis at this point. So anything over that is now just gravy, an extra dividend, if you will. All right, that's all I got for you guys. I hope you enjoyed this and had something to take away from it. If you did have something to take away from it, smash that like button. Show those little bots in there that there's some good content here to consume. And subscribe, hit the bell so that you guys get notifications. And don't forget to comment, folks. I circle back around. I want to make sure you guys are all clear of concept. I think this old salty trader, 25 years of experience, might be able to help you out here and there with a little bit of wisdom. So that sounds interesting. Let's get on with it. Can't take that? Take it easy.